It's really a flexible account that allows you to contribute when you want. You can contribute as much as you want. You can use the money for whatever you want. The last step on my kind of standard hierarchy is the taxable brokerage account. With the 401k, with Roth IRA, with HSA, all those accounts have some sort of tax benefit that comes with it, right? You either get a tax benefit now when you make the contribution, it grows tax deferred, and then you may or may not get a tax benefit when the money ultimately comes out. With the taxable brokerage account, none of that exists. But the beauty of that is that when you have capital gains, especially long-term capital gains, they're going to get taxed less than any of these other accounts when you're making withdrawals. Obviously, the exception is Roth IRAs. They don't get taxed as long as you meet certain requirements. But the taxable brokerage doesn't have any of those requirements. It's really a flexible account that allows you to contribute when you want. You can contribute as much as you want. You can use the money for whatever you want. You do have to be aware that you are being taxed on the growth as it happens and as it's being realized. But as long as you understand that and accept that you have to be thinking about taxes when you're selling in that account, that then allows you to build some flexibility and build even more tax diversification in your overall portfolio and investment accounts. Outside of that, the biggest gotcha, I would say, of this account is that there may be some additional tax advantaged accounts that you're missing that, I don't have on this list. And the reason for that is that they're just not as common and they're not useful for everybody. We will talk about 3 of them. We won't talk about all of them because there's a lot and it gets really niche very quickly. But I am going to talk about the 3 that I think will affect, who I'm talking to the most and the most often. Quick thing that I just want to run through. So if you were to be maxing out each of these things through the ESPP and you're under 50 and file single, then the total contribution across these 5 accounts is about $55,000. If you're married filing joint for your tax filing status and you're over 55, then it's about $70,000. Now, that $70,000 assumes that only one person can do the 401k max. It assumes only one person can do the Roth IRA max, and only one person can do the ESPP max. The HSA has a tax return max. So if you're a single filer, you can do up to $4,300. If you're a married filing joint and over 55 or 55 and older, then you can do $9,500. Again, per tax return. So this number actually could be a lot bigger if there's 2 people working and have 2 401ks eligible, 2 Roth IRA contributions, 2 ESPP contributions. We can add 60,000 in contributions on top of what I'm suggesting. So it gets pretty big pretty fast. And if you're doing more than that, that's amazing. And again, these numbers do not include the taxable brokerage since there's essentially no limit to how much you can contribute to that account. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.